Hi, I'm Frida Wallin. I'm with the Economist Corporate Network in Hong Kong, and we just had our regional strategic forecast meeting here in Hong Kong, where we discussed the global economy and the Asian economy in the world and the outlook. And I'm happy to be joined here by Leo Abruzzese, our EIU's Global Forecasting Director. And I can start by saying, Leo, that the global economies we had a lot of bad news here the recent weeks, and the stock markets have been very volatile, and both from the EU and the US we're not seeing a very good outlook. Are we heading for another recession?
It's a good question, Frida. Our view is we think most of the countries, especially in the West, developed economies, will just avoid a recession. But it is a close call. Given that there was a mild recovery underway in the US and the eurozone earlier this year, that recovery has pretty much hit a brick wall over the last 4 or 5 months. Growth conditions are very weak, consumer confidence, business confidence weak in most places in the West. But that said, we do think that there is just enough of an undercurrent of strength. There is some positive consumer sentiment in some countries, and we do think that the worst of what we've seen over the last 6 or 7 months has been the result of a series of shocks. There have been political disruptions in the United States, the debt downgrade. Of course, Europe has been, unfortunately, a rolling catastrophe for some months right now. We do think that if we can get past some of these shocks, and if it's possible that the situation in Europe can even at least remotely stabilize a bit, if the United States can get past some of the debt issues, at least from a political standpoint, there might be enough of a foundation to just keep the economy out of a recession. But that said, growth will be very weak. We have cut our US forecast, we have cut our eurozone forecast, so we are almost literally on a knife's edge at the moment.
So what would you say are the risks for a eurozone breakup at the moment?
We have raised our probability for a eurozone breakup to more than 40%. And we've said that because although the European governments, the ECB and others have worked at this quite hard over the last year, clearly they haven't gotten their arms around this. Clearly they have not convinced the markets that they have a plan even for addressing Greece or Portugal, let alone Spain or Italy. And if anything, the whole political process with regard to trying to resolve the issue is quite dysfunctional. And the markets have responded by selling off hugely. We do think that ultimately the eurozone will be able to muddle through, but we don't have a huge amount of confidence in that forecast. And that's why we think that there is a greater than 40% probability that there will be a breakup of some fashion in the eurozone. And the point is that if that were to happen, it would not be confined to the eurozone. If there is one factor that could tip the global economy into a recession, the global economy, not just the eurozone, it would be a breakup or further disruptions within the eurozone economies. That is the number one risk right now.
And going back to the United States, how do you see the prospects for the American economy? And now Obama is trying to have to do something about the job situation in the US. Do you think he will succeed with this?
Well, clearly the biggest problem in the US is unemployment. The US unemployment rate is over 9%. The US is still down about 6.5 million jobs compared with where it was a few years ago. It's the number one issue in the US. US growth in the first half of the year was basically not much above a half a percentage point. So the US is in quite a weak condition. But as much of what has been happening in the US has been the result, we think, of a lack of business and consumer confidence as well. You can detect, if you look hard enough, some undercurrents of consumer resilience and business resilience in the US. For example, corporate profits in the US are at the highest level they've been in 50 years. So if corporations had the confidence to hire, they certainly have the means to hire. So while the US is unquestionably weak and very much in danger of falling into a recession, there is at least a prospect, if confidence can be restored, that conditions might improve. And that's what President Obama was trying to do last night with the jobs plan. And we rated his speech as a fairly good one and a modest plan, but we think one that will probably provide some modest pickup in growth over the next 18 months. Nothing to get excited about, but certainly better than, say, where we were 24 hours ago.
That's right. So you mentioned in your presentation at the Region Strategic Forecasting meeting that Asian trade and in Asian region, intra-regional trade has increased quite significantly, and that Asian economies are becoming less dependent on the US and the EU as their trading partners. Do you think Asian economies could withstand a sharp slowdown or even a recession?
Well, they could withstand it to the extent that it's probably unlikely the economies here would fall into recession. But the idea that the Asian economies have completely decoupled with the US or with Europe is not the case in our view. It's important to remember that for China in particular, its biggest market is the eurozone and its second biggest market is the EU. And in some fashion, the level of dependence by the smaller Asian economies is still considerable. Now, having said that, if you look at the volume of trade between Korea, Malaysia, Singapore, Indonesia, Hong Kong, and others, the level of their dependence on selling their exports to the US and the eurozone has certainly dropped over the last 10 years. So they are not as dependent as they were. On the other hand, if you look at what happened to Asian trade in 2008, when the recession started, trade fell off a cliff in 2008 and 9. And most economies in Asia, not China of course, but most economies in Asia did go through a recession. So Asia is certainly a good place to be right now. You don't want to be in the eurozone at the moment, and certainly conditions are very poor in the United States. So if you had your choice, you'd rather be in Asia from an economic standpoint. But Asia will not completely withstand it. There will be ripple effects here. Remember, the US and the eurozone are more than half of the global economy, and a big hit to that bigger region will have implications everywhere.
Yeah. So Asia has also a lot of problems with inflation, and many Asian economies are struggling with keeping the inflation figures down. And many governments have increased interest rates recently. And do you think this monetary policy in Asian economies will continue further looking ahead?
I don't think you're going to see as much tightening looking ahead for two reasons. One, a lot of the inflation was happening because of commodity price increases. Some of it was being driven by just demand. Higher demand will drive inflation, but so will higher commodities prices. Commodities prices have either stabilized or come down for the most part over the last 8 or 9 months. So that will help. Looking forward for Asian inflation, it should be lower than it's been over the last 6 or 8 months. So for that reason alone, the central banks would have less need to be tightening monetary policy. However, on top of that, the Asian economies are about to import at least some of the slowdown from the West. And you've already seen in the last week any number of central banks in Asia either say explicitly or implicitly that they're on hold right now. On hold in terms of raising interest rates further. Because why raise interest rates and try to slow your economy further if you're about to be hit with a wave of slowdown from the US and the eurozone? So I think inflation, though still high and worryingly high in Asia, is headed down. And then with demand from the Western countries also slowing as well, that should also create some additional downward pressure on inflation.
All right. So looking ahead now, and what are the main key bright spots you can see, and should you be any optimistic reasons to, or are there any reasons to be optimistic looking ahead? And where should businesses, what should they look at if you're looking at the upcoming?
Well, it's difficult to find big reasons to be optimistic, at least for the next 6 or 12 months. Again, the portions of the global economy, the US and the eurozone, they're responsible for $30 trillion of output. And it's going to be very difficult to have any decent growth. We're expecting the US to grow this year by less than 2%, perhaps by no more than 1.5% next year. The eurozone next year will grow by less than 1%. So when you look at the debt levels, when you look at, frankly, the risks to the banking system in Europe is nearly in a crisis, and there would be some ripple effects to the US as well. So it is not a bright period for the next 6 or 8 months. That said, we still see some resilience in a number of places around the world. Certainly, the Asian economies generally are in much better shape, for example, than they were 10 years ago. Asian economies have resolved many of their debt issues. Fiscal management has been quite good in Asian economies. Essentially, Asian policymakers learned their lesson 10 or 12 years ago, and they're going to reap some of the benefits for that now. China, of course, remains a strong economy. It's slowing down a bit, partly to try to quell the inflationary pressures. But Asia is certainly a much better place to be. As far as even the U.S. is concerned, although conditions there are quite weak, when we look a little bit past the headlines, there is some evidence of some consumer resilience in the U.S. A big issue that we like to stress is confidence matters a great deal right now. Underlying conditions are one thing. Confidence of consumers to spend and businesses to spend is something else. And we do think that if the political leaders, who frankly in both Europe and the US have made a real hash of things over the last year, if the policy coming out of these regions improves a bit, if the American government stops inflicting wounds on itself as it did before, it's possible there could be some improvement in confidence later in the year, which would provide a little bit of a foundation for growth and keep us out of a recession. So there are a few bright spots amid the gloom.
Great. That's a good note to stop. Thank you very much, Leo, for joining us today. And I'm Frida Wallin with the Economist Corporate Network in Hong Kong. Thank you for joining us.